What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Ryan Pulis here with another episode of the CPA Zone. Today, we're going to talk about the Corporate Transparency Act. I did an episode on this months ago, but I thought it'd be good to revisit because the deadline for entities that existed as of 12/31/2023, the end of 2023, is fast approaching. They have until January 1st of 2025 to file that initial beneficial owner information report with FinCEN. So a little background. The Corporate Transparency Act established a new reporting requirement under FinCEN, that's Treasury's Financial Crimes Enforcement Network. So the law passed in 2022 and became effective January 1st, 2024. The intent of this law is allegedly to combat financial crimes such as money laundering, but there's a pretty significant impact on businesses, especially small businesses. So most small business entities are impacted and will have to file. LLCs, C corporations, S corporations, other closely held entities that register with the state. Now, sole proprietors are exempt because there's no separate business entity. A sole proprietor is just you acting as being in business, if you will. No FinCEN filing requirement if you operate as a sole proprietor. If you have an LLC, even a single member LLC, which is a disregarded entity, a lot of people will treat that similar to a sole proprietor. That single member LLC does have to file. Now, there's an exemption for many large businesses. So businesses with $5 million in revenue a year and 20 or more full-time equivalent employees are exempt. There's several other exemptions for highly regulated companies like SEC filers, so your public companies, investment banks, entities like that. So full list of exemptions can be found on the FinCEN website. It's under FAQ number C2. But for the most part, smaller businesses are required to file and will have to file this FinCEN report. Now, this act became effective January 1st, 2024. All existing entities as of December 31st, 2023 have 1 year to comply. That's 1 year from the January 1, 2024. So that's where we get the January 1, 2025 deadline for those initial reports. New entities formed after January 1st, 2024 and before January 1st, 2025, so during 2024, have 90 days from the time they start the company or file that LLC, the articles of organization, or articles of incorporation for a partnership with the state. 90 days from there to file that initial report. New entities formed after January 1st, 2025 have to file that initial report within 30 days. Best practice would be to file this report as soon as you create a new business. Now, all entities are required to update for changes. For example, maybe there's a new business address within 30 days of that change. There are severe penalties for non-compliance. It's $500 a day, up to $10,000 per entity, and or 2 years in prison. Now, I doubt the 2 years in prison comes unless you're really trying to lie or mislead the government. Typically, that's only going to be for really gross abuse. If you just forget or didn't know, you're really going to be looking at the fines. Now, the report itself is very easy. It can be filed directly with FinCEN on their website. You go to www.fincen.gov/BOI, and that'll get you right to the beneficial owner information reporting area. There's a bunch of information out there. A lot of third parties can help as well. CorpNet and LegalZoom are two I know of off the top of my head that people have used. But the report itself, as I said, very easy. You're going to report personal information about the beneficial owners. So that's an owner that has 25% or more ownership in the company, or officers or the others with substantial control over the entity. So your CFO, CEO, those corporate officers will have to be part of the filing, and anyone with substantial control over the company as well. And then the 25% or more ownership, sort of more of a bright line test. So for those individuals, you're going to report the full legal name, their address, their date of birth, and a copy of either a driver's license or passport, some sort of photo ID. For the business entity, you're going to report information about the business, very basic name, address, and EIN for that business. So again, the report itself, very easy, but there's severe penalties for non-compliance. So you really want to make sure you get that done. Again, for existing entities, that's January 1st, 2025. Anyone new, you started a company this year during 2024, then you have 90 days from inception to get that report filed. That about does it for today in our discussion of the Corporate Transparency Act and the Beneficial Ownership Information Report. If you found value in this episode, please hit that like and subscribe button. Until next time, have a great day.
This audio segment was edited by me, Adam Rothstein. If you would like help editing your podcast or narrating your audiobooks, please email me at adamrothstein29@gmail.com. That's ADAMROTHSTEIN29@gmail.com.
So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.